Good afternoon. Time to have a look at what's happening from a markets perspective. Asian markets were lower. This is on the back of the FOMC minutes that outlined that the Fed is planning to pay back its balance sheet by $1 trillion a year and, of course, raise interest rates. This is in a plan to curb inflation. What was quite interesting in those FOMC minutes is that they did consider a 50 basis point hike in March. However, the developments around Russia and Ukraine forced their hand. Nonetheless, we did see the Japan down more than 1% lower. Chinese markets also declined, and we also saw negative territory moving through from a Hang Seng point of view. Locally, we're seeing our markets lower in line with our global peers. What's also interesting as well is that we did see Wall Street decline a little bit lower as well. A second day of sell-offs, and in the JSE perspective, it's the third day of sell-off. But to give us more perspective in terms of how the FOMC markets, especially how investors have reacted to those FOMC minutes, we are joined by Connette van Zyl, who is an analyst at Absa Asset Management. Connette, thank you so much for your time. I mean, starting the day off, we saw the JSE opening a little bit lower. How are we doing now, considering that the market is still digesting this aggressive, hawkish tone from the Fed?
Yeah, hello everyone. Anastasia, it's another red day on the JSE today. It is being led down by the resource sector and by financials. The rand is also weakening. We're at 14 rand 72 the last time I checked relative to the dollar. That has been sort of on a weakening trend for the last week or so. I think for the last week, and especially in the last couple of days, there's definitely been a risk-off mood that has settled back into the markets. And it's the same concerns of the last few months, fueled again by these FOMC minutes that you've just spoken about. It's global inflation, it's global growth reducing on the back of that. It's the tightening of balance sheets of higher interest rates by central banks across the globe. Poland hiked rates by more than 100 basis points. And then also just the concerns around the war in Ukraine. All of these playing out in global markets and on the JSE, and we're seeing a firmly negative day again.
Right. So yesterday afternoon, we had a trading update from Pick n Pay. Currently, that share price trading at around 5.6% higher. What are your thoughts on Pick n Pay's strategy in terms of switching from only focusing on the middle class to now encompassing both lower and higher income segment?
Yeah, so I like the strategy. I think the trading update that came out yesterday from them was a strong one. They're expecting earnings to be up between 8 and 18%. Sales growth for the group for the year is up 5.2%, and they are really gaining market share across many. You've got Pick n Pay clothing gaining market share. You've got Boxer gaining market share, which is in that lower end of the market space. So it seems like a good strategy, and it seems to be benefiting them at this point.
Let's get back to those FOMC minutes that you touched on a little bit earlier in your response. I mean, is there a concern at the back of your mind that a risk of recession is looming, considering that the fact that they are planning to trim back that balance sheet? And we also know that interest rates, that 50 basis point hike is on the cards. It could be an option. We're not sure yet. The risk of a recession in the US.
Yes, I think it's a valid question to ask, but I think your starting point has got to be what's going on in the US economy right now. So as things stand right now, the economy is robust, employment is at record high levels. So right now the US economy is strong and it can handle some tightening, and in fact it needs some tightening to bring inflation under control. So the big question is how much tightening is needed and over what period of time is it needed to bring inflation under control in the US? And if the Fed embarks on this hawkish stance, what is the impact that it is actually going to have on inflation if inflation is driven, by higher commodity prices, by supply chain constraints because of COVID still, subsiding? So those are the questions that investors have to ask themselves. But, tightening at this point for a reasonable amount of time will probably not push the US into recession. It's for how long it goes on and how quickly you can bring inflation under control.
So we had the International Energy Agency member countries agreeing to release about 60 million barrels of oil onto the market. This is on the back of the US's already 180 million barrels that they did announce. Is the market at some point questioning whether these strategic reserve releases are actually going to make some kind of, I suppose, change to the structural nature of the supply-demand dynamics when it comes to oil?
So I don't think it changes anything in the long term or from a structural point of view. You have to consider what is intended by doing these actions, and it's also important to remember that this is not the first time that the IEE has released strategic reserves. It's done it before in periods of crisis, and the aim is really over a shorter to medium term bring oil prices under control, bring inflation under control, and release pressure on consumers. So the idea is that the IEA and the US will combine over the next 6-month period to at least the end of the year on a monthly basis release physical oil into the market and try and bring oil prices down. And we have seen that 2 weeks ago, Brent crude was trading at $120 a barrel. It's down to $102 right now. And the idea is just in the short term to take the pressure off. But in the longer term, oil prices, just as with any other commodity prices, will be determined by supply and demand. And this is a temporary solution. And as soon as it ends, those normal factors will come into play again. And at the end of the day, it will depend on how quickly we can resolve some of the geopolitical issues, especially around the Ukraine and Russia.
Connette, let's leave it there. Thank you so much for your time. That is Connette van Zyl, who is from Absa Asset Managers, giving us her perspective in terms of the latest market dynamics. Of course, today we are looking out for the speeches from the U.S. Fed president. And of course, we also have the U.S. weekly jobs claims. But we'll analyze all of that tomorrow. But that is it from me. Goodbye.